Welcome back, good folks. I am glad to see you, and I'm glad that you are stopping by here today. It is the last trading day of the month, as well as the last trading day of the year. And so, as you know, if you've been following the channel, every single month on that last trading day, I like to just go through and update my Excel spreadsheet, and I'm glad you're with me because you're going to be able to see that. Today, I got a couple notes to help me keep me a little bit more organized. So if this is your first time kind of seeing this, what I'm going to be doing is showing you all of our transfers from our checking account into the different brokerage, the retirement, as well as the child's custodial account. We're then going to update our cost basis and positions and shares and whatnot in an Excel spreadsheet that I'll show you here. And then finally, again, with it being the last trading day, this is a special one. The last month of each quarter, you'll see I have another line or another graph here on the side in my Excel spreadsheet that I update and kind of get some additional figures, as well as get an annual cost on, or not a cost, but an annual accumulation of the dividends paid out for the year. I am a little frustrated with ARC. ARC was supposed to be paying out their dividends for two of the particular ETFs that I have, about $250 some odd dollars or so. We'll look at that when that pops up. And that was going to bring my annual dividend amount on my particular portfolio up, and they didn't, and now my annual dividend looks pretty low. So I don't really know what happened with ARC regarding that, but that's neither here nor there. Let's get right into it right after this. All right, so the first thing that I want to go over and just show you is the transfers that are made from my personal account into the different accounts and whatnot, to just show you how much money got pushed around for this particular month. So as you can see here, this is the first one, the $3,300. This went into the personal brokerage. That does have the most money, this $3,300 came into the account, and this $3,300 went into the personal brokerage. So that is our main account, and that's where we put the majority of our funds into. This $400 goes to my retirement, which again you'll see in the $100 goes to my child's custodial account. We will, or you'll see next month, this has been updated because as I was doing the $400 a month in IRAs, if you're familiar, you get $6,000 a year. 400 times 12 is $4,800. That means you need to make up $1,200 along the course of the year. Well, in this particular year, 2021, I did not make up that $1,200 anywhere. However, with IRAs, you do get all the way up until April 15th of the following year, and or when you do your tax returns. So I'm going to be making up that $1,200 in the first 3 months of 2022, as well as what I have done is increase from $400 to $500 a month, so that now going forward, I no longer have to play that catch up going into the following year. So this is the personal brokerage. This is the retirement, and then this is the child's custodial account. I got in here, Coinbase is the crypto. I did a lot of stuff at the beginning of the month. It was a great buying opportunity at the beginning of December, and I flooded all of the accounts. Well, I'm lying, because retirement and my child's custodial is set automatic to come out on the 4th. So that's always a given. Around the 4th, this is where this money comes out. But Coinbase and the personal brokerage, I wanted to get money into the market at an early amount, or at an early date of the month. And so you see this happening at the beginning of December. Now, funny enough, let's see here. Around halfway through the month, I actually switched over to crypto.com. And so I did another $500 going into crypto, which is this right here. Which is this transfer right here. So I actually did $1,000 into crypto for this particular month. Crypto.com has a lot of staking that I am available, or it gives me the opportunity to do, whereas I didn't have that on Coinbase. So I have pretty much left Coinbase completely, and I'm 100% in Crypto.com. So with that being said, now let's go over to the personal brokerage, as well as we're going to pull up the Excel spreadsheet. This is the spreadsheet that I update every single month. And again, if you are returning viewer for this, you have seen this. If you are new to this, this is what I like to do on a monthly basis, just to get an idea as to where values have gone, what cost basis come up or down. This is all valuable information in some form or fashion to me that I like to have in front of me and presented on one document, so I don't have to pull up crypto.com, retirement, personal brokerage, but I can look at one document all at one time. Now, I'm going to show you this, and we're going to kind of talk about this, but as I start adding in figures, I'm just going to pretty much do it over my phone because it is a lot easier than trying to go back and forth on this. So, as you can see, this is all put together, but I have actually broken out into two separate accounts, a buy and hold as well as then our growth portfolio. And so the buy and hold portfolio overall did pretty good this year. Decent. I only really had one bad loser, which is this cannabis right now, which I understand why, and I have done a couple of videos on this in the past, and I'll make this brief, but cannabis, I believe, has lost a lot of the growth dollars because the legislation that was being discussed at the beginning of the year had kind of fallen on deaf ears due to Build Back Better plan and all of the other things regarding Delta, the different COVID variants and whatnot. And so this has gotten kind of lost in the shuffle. And so I do believe that once cannabis comes back into rotation and once we start talking again about legalizing cannabis across the country, then this ETF and all of the cannabis stocks and whatnot will begin to build some momentum and start going in the right direction. So I am actually okay with this position being so negative. I am still DCAing into this every single month, bringing that cost basis down. We can see real quick. So it's trading at 14.13, and this again is why I like this spreadsheet. Cannabis, my cost basis is 1976 in this particular ETF. So that's why I am down 27%. But other than that, SMH was my big winner. I'm up 34% for that one for the year. Only got about $11,000 into that one. Want to get that a lot more. QCLN has done well. Kind of went back and forth. Periods it has taken off, falling back right now. This has been as high as 30% as well throughout the year, but as you can see, down 4%. Long-term play, very happy with it. Not worried. Continue to dollar cost average into this one. But outside of that, IYC did 13%. FHLC did another 13%. iPay, this one actually I was a little bit shocked in it, and I don't really have a complete understanding as to why this one is down 12%. This is your Visas, MasterCards, Squares, PayPal, a lot of the American Express, Fifth Fur is in there, Affirm is in there. Those are kind of Bill.com, I think, are the big ones that I'm trying to remember off the top of my head that are in there. And so I have kind of understanding for maybe like a Visa, MasterCard, or even a Square and PayPal why those are down. But overall, they're kind of different categories within the financial payments industry. And so I don't really understand completely, and I'm going to have to be doing some research here on why iPay is down. Either way, though, I am long-term wise believe in it and still, again, dollar cost averaging into this every single month and look for this to bounce back this upcoming year in 2022. Lit is a great one. It has kind of fallen back significantly. This was around $95, $96 last month. If I look here, I had some high purchases. Let me see here, Lit. 92 was the highest that I had bought, but this bad boy has been up to about $96 or so within this year, and so this was up to 35% as well, and has fallen back. And again, this is completely long-term fine. Let that build, and every single month keep on adding in. My SPYD, my high dividend ETF, which actually also I'm a little bit frustrated in because this was paying 5%. And I was very happy with it. And then all of a sudden in this particular month, right before they were going to issue out the dividend, they brought back their amount that they're paying out significantly from $2.16 a year down to, $2.16 down to like $1.55. I mean, they cut off a significant portion of this particular dividend that, and I have been trying to research on that and haven't been able to find, $1.55. Haven't been able to find the reasoning as to where that 65 cents has basically 66 cents has went. And so that has broadened down the yield on this particular ETF. However, it has continued to run. And that is what I don't want to happen for this particular position. I'd rather this position kind of move sideways for a while I begin to accumulate shares. Because, again, you really see the benefit of these yielding type of, whether it's individual stocks or even an ETF, when you have, a lot of shares. Getting a 2% increase on your dividend on 10 shares isn't going to be anything significant. However, if you have 1,000, 2,000 shares, that's where it's time to talk. All right, so let's get into it and let's start adjusting this bad boy while I go back and forth here. All right, so let me open this up. So let's go to the long-term portfolio. So SMH has now taken first place, and we have 50 shares. Real quick. Before, I always like to see how many shares I went up. 1976, 98, 898, 72, 75, 10 is the average cost position for my portfolio. All right, so here we go. So 50 shares, 11,494, 15. Cost basis 229, and the current position is worth 439.50. Boom. Okay, and this is now number 1. QCLN is number 2. This is 214. Cost base 15, 263.06. Cost basis went up 14, 546.87. Cannabis is 634. 12,435.25. That cost basis went up 8,958. This was the hard month for cannabis. IYC is 63. 4,659.49. That cost basis went up 5,292. FHLC is 76. 46.18.29. Cost basis went up 52.18. So you guys, the thing that I want to point out, your cost basis going up is not always a bad thing. Now, don't get me wrong. If you can find a particular time in the month where your cost basis goes down, then that is always a benefit, especially if you believe in the position. But in time, especially over years, you want your position's value to go up, which means if you continually are purchasing into a particular ETF, dividend, whatever the case may be, over a 5-year period, that means in year 46, 45, you're going to be paying more than what you were paying for in year 42, in year 12, in month 12, 15, yada, yada, yada. But what you have to keep in mind, and hopefully what is happening, if that position is going up, it is the group of companies, if it's an ETF, is now producing more capital, they're more valuable, and that's why that share in ETF and that price has increased. If they are not doing that, then that share price, that ETF value is going down, and then that's where you should question yourself whether or not you should continue purchasing in that particular position. So I talk to some friends and they get upset that their cost basis is going up, and again, that's not always a bad thing if you still believe in the company or the particular industry, and that industry is generating more dollars and more cents on a given quarter, given year, decade. 18, 47, 27, 19, 34, 30. All right, so that is the growth or the buy and hold portfolio. Now let's switch over to the growth portfolio. This portfolio is kicking my butt, man. And it's a little bit frustrating because this one has now taken 12th place. ARG, I don't think I did any purchases of these in this year. Definitely not ARG, but the value has increased to, no, it hasn't increased. The value has went down. ARGW, 67.99, yep. But the value is 79.44.86. So the next thing that I want to bring to your attention is, as you guys can see on these particular positions, this one I did make a purchase. As you can see on these particular positions, they are down significantly. ARCG and ARCW are hurting me. ARCG is the worst. Print probably is next. We'll look at it again on when I pull that back up. But you guys have to make sure that funds that you are investing are not funds that you need immediately. If you're looking to use these funds for a down payment, for a home, a large purchase, home improvement, whatever the case may be, you want to make sure that you are giving yourselves adequate amount of time for your portfolio to deal with the ups and downs of a given market. A lot of these companies have gotten more efficient over time due to COVID, less employees, struggling to find employees, things of that nature. However, some of that stuff is not showing up in the actual P&Ls just yet. They might start showing up next year, the year after, those efficiencies that I'm speaking of. And so if you have money that you're putting in that you're expecting to use in 3-6 months, and you have especially a play that is as volatile as my growth portfolio, it might cause you some harm. And when you go to pull those funds and need those, the values are going to be down. As you can see here on this ARCG, which is this guy right here, the 12,093, is how much capital I put in there. Right now, it's only worth $7,900. Same thing with the ARCW. I put in $9,900. I'm down $2,000, and it's worth $7,900. So some of these positions, for me, I'm not expecting to touch these for 3 to 5 years. So not till 2024, so 2025. I got some of these completed at the beginning of this year, so I have a runway that I'm expecting. But as that time starts approaching, come year 2024, things of that nature, and I start seeing, I'm going to start taking some of that capital off the table just to protect myself to then be able to use that to start making the transactions that I want to make with this particular fund. And so I just want to point that out to you as you're going through and building your portfolios. If you have specific places that these funds are going to be used at, have an idea as to when that date is and start pulling off prior to, because you just never know what's going to happen in the market. And the market has, as you probably know, these roller coasters, and you just don't want to be caught when that roller coaster is down and you need those funds. All right, so let's see here. Now I have a total of 2,057 shares across the whole portfolio, up from 1976. I also have $102,000 completely invested into the portfolio, originally $98,000. And then my cost basis went up about 14 cents from 75.10 to 75.24. I need to update the cash. And I'm going to do 2 cash ones now because this is going to get difficult. This is cash, buy and hold, 18 cash and growth. All right, so let's see here. Cash for growth is a whopping 13 cents. 13 cents. And then cash for the buy and hold is 135, 35, 135, 35. All righty, cool. So let's make sure these match up. 102, 301.70, 102, 301.70, and then make sure I did everything right. 102, 301.70. Beautiful. Okay, and then 94, 915, 26. 94, 915, 26. Perfect. So let's save this. And then the next thing that I'm going to show you is for this particular month, dividends came in. So I want to show you, I have already added these in, so I don't really want to bore you too much, but let's just look at the transactions. Again, I believe I'm missing $250 in dividends from ARCW and ARCG, and I'll show you what I mean in just a moment. So the dividends started coming in, let's see here, around the 17th, with the first one being IYC for $2.67. SPYD gave me $5, $6. FHLC provided me $17 over this quarter. SMH only pays out dividends once a year, but that sent me a check for $78. And then today I got a dividend for 13 cents from print and then 10 cents from cannabis. Oh, that means my son got a dividend too. From that, what is weird and what is a website that I use for dividends? If you go to, what am I trying to do? ARKW, or no. Let's go to CNBC. All right, I can't really see ARKW, but oh shit, here we go. ARKW. Okay, so I want to show you this right here. So ex-dividend date 12/29/21. ARKW is the same one as Print. So, which is an ARK fund as well, which is, again, why I don't really understand why this particular dividend didn't pay out today. But maybe it'll pay out in the first quarter of next year, and those funds will just get added to next year's dividend. Totally fine, whatever the case may be. But the dividend amount is $3.11 per share. So we're going to go 311 times, I believe I have 67 shares, times 67. That's $208 right there that I'm owed in dividends at some point in my life that my family will be able to see. And then ARKG, let's see here. ARKG 12/29/21 pays out 38 cents, 0.38 times. I have more shares of this. This is going to be ARKG 130 times 130. So that's where I say I'm owed $250 in dividends. But if you add this in right now, 49, 40. Oh shit, wrong one. 49, 40, and then 208. That brings the total dividends to $360 for this particular month, $419 in dividends for the year, and then based on where I'm currently at, this is with today's closing, 94,000. My portfolio generates, 0.5% in dividends on an annual basis. So you want to let this stuff bake. Let it bake. And what I mean by that is, over time, this is going to grow. As that portfolio begins to grow, if this is of importance to you, if you're an income type of portfolio, you would definitely want that to be a lot higher than what it is. But it's going to start to provide you more income in the future. So this particular year, it came in around 0.44. Or no, it didn't. No, it didn't, because I got ARK in there. It came in at 0.17%. So I can guarantee you next year it's going to be a lot higher, because the dividends from ARKW and ARKG didn't come in today. They're going to come in January, which is going to be in the first quarter line. So next year is going to probably bounce somewhere closer to about 0.5, 0.6% for me. Well, it's going to falsely be higher because it's going to get quarter 4 dividends in quarter 1 plus then the course. But I'm getting a little bit if you're not following that. But I want to push this closer to 1% as I begin to move. And for this particular, starting in January, I'm going to start adding these 3 in, and those particular positions pay dividends definitely north of 0.5%. And so that's going to start pushing that percentage closer to 1% over the course of a year. Now, again, I'm not trying to rush and get to 1% too fast, because that means I need to put in a lot of dollars in SPYD, FUTY, and FHLC, are my highest paying dividend ETFs. And I don't want to do that. I want this to happen naturally. I want this to happen from year over year dividend growth, as well as I want that to happen just by having, 3 positions in my buy and hold portfolio that pay a decent yield and have that drag it closer to 1% over time. All right, so I have shown you the deposits. I have shown you the updated cost basis and things of that nature. Now we're going to update the retirement account, as well as my son's cannabis. My cannabis is one of my son's ETFs. He doesn't do cannabis. I do not want that to be on TV. All right, so now let's go to Fidelity. All right, Fidelity. As you can see here, this is the overall position for all of the 3 accounts. I have my son's custodial, my traditional IRA, and my Roth IRA. Let's do, I don't want to go back and forth, so let's do my traditional. All right, VTI, I got 29 shares, 75 shares. Wow, they did some buying this month. So this account is managed by my wife's financial planning company. So I don't do any management of this account. All I do is collect data and just see what they do. This gives me an idea of what management funds are doing, so that I can kind of pick and choose what I like that they do. And really it's the asset allocation. It's the purchasing of ETFs just on a monthly basis and not really caring about politics, things of that nature. It's just really showing me kind of what a professional investor does. So I would recommend that, maybe one account or some money that you kind of put to the side, have a professional manager manage that for you, just so you can get a feel as to how they manage your funds. And then if you have another account, such as I do, the personal brokerage, then that's the one that you manage in, and maybe you put more money into that, or while you're learning and whatnot, you give more money to the professional manager, and then in time you switch over. But I like to just kind of hear and see what they're doing in my account, and then try to just pick and choose things that I like. All right, so let's do the current values, because this gives a little bit. Current values is 7,176, and then 3829.50, and then 6072. All right, and then let's do the cost basis of this is 6,067.14, and then 3743.51. Okay, so now what you can see is the current value 10.891.98, current value 10.891.98. Okay, now I'm going to do my sons, and then I'll show you all of that account information back there together at one time. All right, so Blake, Pierce, those are my brothers. Elliot's account, I'm done with QCLN. And then cannabis, he got 50 shares of that now. The current value. So I did a video on this, missing the dip. My son's account really showed me this, and the purchasing a particular ETF in not the right timing really caused your account to be negative, especially if you're going through some volatility. My son's account is in negativity right now, because the way that I did his account is the first $1,000 that I received, I put it all into QCLN, and so I got that position finalized first. However, I purchased that particular ETF at the beginning of the year while kind of everything was running high, and so my cost basis on this particular ETF is $76 in my son's account, whereas right now I think it's trading around 68 some odd dollars, and so he's significantly down. Same kind of thing somewhat happened in cannabis. It's not as bad, but his cost basis in cannabis, we're going to see here, is $1,634. So his cost basis is $20. If you remember, mine was $19, so my cost basis is a little bit better. But again, purchasing his particular shares at the wrong time caused me not to take advantage of this volatility. Because don't get me wrong, I still want to be in both of these positions. But if I could have waited a little bit and picked a better time to get into these positions, it would allow this account to start seeing the rewards a lot sooner, the returns on funds. And so that is what I'm changing going forward in both of our portfolios, which is something that we learned from the traditional Roth or traditional IRA account that's managed by my wife's company, is how to just time the market, not time the market, but how to put your funds in a particular ETF that is just going to pretty much track the S&P 500, and then as you start seeing volatility, pull funds out of that and then start purchasing some of these growth ETFs and other things. And so that's what ONEQ is. Going forward, I'm going to put all of my son's money into ONEQ. It's a technology ETF that just pretty much tracks the S&P 500, NASDAQ actually, to be specific. And then as I begin to see opportunity, then I'll pounce instead of just buying month after month after month DCA for this one, because I'm not DCAing long enough for it to overall work out. I'm only DCAing for 5-6 months in these particular ETFs. And so my DCA is a small amount. Yes, it's better than putting it all in one time, but for me, that DCA is not a long enough period in time. All right, let's do account values for these, and I can show you how he's down significantly. All right, so current value for this one, QCLN is 883.61. So he's down $100 there. For cannabis, 706.50. He's down damn near $300 for there. He has $29.33 in cash, $29.33 in cash. Activity, did he get a dividend? He got a dividend, baby, from 1 cent. So now let's go over to the retirement and let me show you how all of this matches up. All right, so here we go. So completely $13,000, but 1619.44, 1619.44 for Elliot's account, and then 10,891.98 cents. 10,891.98 cents for that one. And so that matches. I don't do one for my Roth because I don't put any money into the Roth. I originally started, I used the dividends that it generates and just kind of let it go, but it only had $500 in there, and so I don't track that one on this particular Excel spreadsheet. However, what we need to do for quarter four is now add in the current value. So that is 10,891. 10, 8, 10, 8, or 9, 198. Those dyslexia. All right. I've already added in the particular shares, or excuse me, dividends. So as you can see here on this particular account, on a $10,000 account, because of the type of funds that it is purchasing, it has created a dividend of 1.57%. And so for every $100 in dollars vested in this particular account, $1.50 is provided to me in annual income over the course of a year. So now the reason that this is valuable and the reason that I track this specifically is because I have growth calculators. Calculator. Lord have mercy. Compound interest. This isn't the one I want. No, not yet. Okay, current principal, annual addition $6,000, years to grow 30, interest rate 12, compound one time. So this is where this is valuable. So you do compound calculators like this. This is my Roth IRA. I put in $6,000 a year over 30 years. I get a 12%. It's going to be somewhere around $1.6 million. And so, as you see, times 0.0157, which is 1.5%, which I'm getting, every single year in year 30 is going to be giving me, at a minimum, $25,000 a year. And now someone will say, well, you know, Aaron, that's not as sexy. That's not a lot of funds. But I want you to think about when you start talking about, and I've done videos on fire numbers and whatnot, and your pull rate, and say you need $100,000 a year to live off of, now you only need to pull out $75,000 because you're going to be getting $25,000 in dividends. So, yes, it's not something to get out of bed with. And at the beginning in this growth, you know, $100 a year, $200 a year, it's not going to get over $1,000 for, you know, 2 or 3 years. But on the back end, when you're really starting to use this and whatnot, that's when those funds are going to be just extra icing on the cake. It's just one faucet that pours into your bucket. So if you get $25,000 here, you get $75,000 from your retirement account. Maybe you have a couple of rental properties that are producing $20,000-$30,000 a year there. I mean, all of this just slowly starts to add up. But individually, nothing is exciting for you. But at the same time, all of this is now capital gains income, and it's not W-2 income. That's the other thing. So this $25,000 in capital gains income is probably worth, you know, $35,000, $40,000 in W-2 income because it's not going to be taxed in the same manner. So that's that. So now let's hurry up so I don't keep you guys too long. Let's get you over to the crypto side, and then we can get on out of here. So you're going to have to believe me a little bit. I'll show you this on crypto.com. I need to get the app where I can link up my phone to the account or to my computer so you can see that. So on the next live stream or next month in January, I hope to have that all rectified and go from there. But as you can see here, 68,1470 is where it's currently at for the month. And then I just made a purchase into AMP actually a couple minutes before I even came online because AMP dropped below $4 or 4 cents. And so is this? 889.43 plus 4307. 932.50. 932.50. This is the only thing that I hate about crypto. There is an app that I saw another guy use that I might think about getting, but you have to pay for it. That basically tracks and tells you, if you're up and down in your positions, what percentage you're up, all of that good stuff. Kind of how Chase does, where I was showing you I'm up 20%, down 30%, whatever the case may be. However, you got to pay for that. And this is where this Excel spreadsheet for me comes into handy, because I track all of this, so I can kind of look here and just see when I'm up, down, and all that. I can do the math to figure out the percent up, percent down if I wanted to, but I don't have that built in. But without this, you just keep purchasing month over month over month, and you never know where your break-even point is. And so that's what I just don't like. That's the one thing about crypto that they need to fix. And then after that, we will be good. So, all right. Okay, so I got $317 to go. I like to get these kind of altcoins that I'm kind of doing one-offs on to $12.50, and so I'm almost there for that. I am, let me see here. Let me make sure. So I have already, I've already updated this one, because again, I like to do this right away where I don't. So I have 1,700 coins of Cardano at a position cost of $27.89 for a cost basis of $1.57, and it's currently valued at, this is going to be ugly. I don't know. The reason this is ugly, I'm going to kind of, if you're not familiar with the crypto.com, crypto.com has where you can start staking this stuff, but they break it out from where you stake, and then like for me, I have 1,600 coins being staked right now, and then I have 100 coins sitting, where's Cardano? Right here. I got 100 coins sitting right here in another one. So you got to add this stuff all up. I'm not going to bore you with all of that, but at the end of the day, I want you to know that I have $6,800 in this particular, in my crypto fund right now. So, about 10 grand in retirement, 6,800 in crypto, and then 95,000 or so. Yeah, 95,000 in brokerage. So things that definitely came down from last month. Let me possibly just show you. Oh no, I signed out. Let me sign in. I'm going to edit this out real quick while I sign in and then bring. All right, I'm back. So, as you can see, today I lost $500 in the market. I'm down $7,300, which is all from my growth account. But the point that I wanted to make for you or show you, this graph is really nice. It shows you kind of month over month what the account has done. And as you can see, over time, it has went up and to the right. However, you get a period here. Hey, look, in November I did that video where we had just broken $100,000 for the first time. It went up to 102. I think I personally saw about 103 was the highest within the day, but this only tracks what it closed at the end of the day. And so we kind of played here in around 100,000 all the way up to the 20th or so, 19th, and then it has fallen down all the way to $90,000. So these are swings that happen, and when your account starts going down in value, you have to believe, you have to understand why. There's a lot of volatility, legislation, things of that nature at this particular time. And so if you recall, I kind of bought in a little bit too early because I put money, this is that spike. So the 6th was 94,000, and then I'm trying to see, the 7th. So somewhere around here, the 8th, if you recall, when I put that 3,300. So this little spike was more just because I put $3,300 into the account, not because the value went back up. But I bought around, somewhere around here, which, as you can see, was a little bit too early. I could have got a little bit better positioning come if I would have waited till about the 20th of the month. Again, you can't time this perfectly. However, when you start making purchases and you see that your dollar cost average can possibly come down, or those particular ETFs have went positive and turned negative, overall for your portfolio, that's when you want to buy, because it's only bringing that cost basis down and allowing you to take advantage of that turnaround when it does occur. So that is just something I wanted to point out. if you find this enjoyable, if you like kind of going over this, you're kind of nerdy the way that I am, please subscribe to the channel. I like doing this every single month. I hope to build a community and get you guys more involved and kind of talk about this stuff on a daily basis. So subscribe to the channel. Thank you very much, and look forward to seeing you on the next video. And Happy New Year's. Thank you so much. Bye-bye.